Shit. Okay, let's see here. I think I got everything open. We'll find out. I figured I'd hop on to do a little talk. A couple people in the past, at least, in the past few, I want to say days to weeks, have been asking me, where do you think GME will go? And I think a lot of them, well, that's not fair to say. I think some of them are previous GME MOAS believers or something. So I think it's fair to, try to inform people of, again, data, never financial advice, never life advice, right? So when they come to me for data, I'm like, hey, why not? Today's a day I'm not taking any trades, really. I'm doing what everyone loves to call it, sitting on hands. So I figured, why not? Let's do this. I meant to do a video summary of the memes yesterday leading up until today, but I did not get around to it. So it's all good. I figured I'd just hop on live if I'm not trading anyway. Let's see here. So I have GME up. Obviously it's doing horribly today. And I expected it. Anybody that's bearish on GME expected it, but the bulls or the MOAS case are all like, oh my god, what's going on? And some of them are, trying to put out a fire and be like, oh, this is okay, the dip before the rip, or they'll pull up the Volkswagen chart, whatever. It's funny. I don't know if you're around still, Cowboy Chipmunk, so I can address the questions you had. But if you're not, I think you said you'd come back and listen to it. Basically, the way I see it is, what will GME do for earnings? I think I'm still pretty bearish. And the reason why is because normally I look at the OI of calls and puts, and I look at, where's big money trying to bet, or bigger money than I, at least, trying to bet on it'll move towards. Okay. Alright, well, again, I'm probably going to leave this recorded, but every time I want to figure out where something's going to go on an ER is I look at the options. I look at the dark pool leading up until then, but I also then look at the options for that expiry date, or as closest to that expiry date as I can get. So in this case, it'd be the 318 ones. And if you notice, I have the 318 ones up on screen right now, and the problem that we run into is there's a large put wall at 100. If it gets over for whatever reason, let's say this, the calls at 100 get filled in along with everything else above the current price we're at, 78, or let's say there's just enough buying pressure, and that's why I mentioned dark pools. If there's huge buys, institutional buys, insiders, whatever, it'll drive it up to where these options will start getting bought up in the next few days, and then it could spill over, I guess you could call it, from 100. Also, very good news also allows you to do that. Like if it's, holy cow, they're announcing a, X for X stock split or buyback or whatever. But the problem we have is looking at the current data where we're standing at today, on the first day of trading of this week leading into an ER, it doesn't look that great, because if you look at all these calls that are saturated way up there, a lot of those out of the money calls are sadly like they're junk calls right now, because it's the same hope as if you look at, January far out, you have 510s being bought again for 2024. And it's just, a lot of it's being driven by that FOMO of people still believing in a MOAS, I think. If they're going to be bought, then there's other people that are going to write them or sell them, or buy them to sell them. The reason I mention this is, for example, in the November run-up, I had a call for 300, but I didn't hold it to 300, and that's what I'm getting at. I bought it before that, so obviously I bought one of those far out the money calls, but I didn't, I sold it when I was at a very good profit on that November run-up. Now, that being said, we also have to look at, other data, like what are whales doing, what are the supports, resistances, because I'll get back to that in a second on the chart, but it's hard to break through those even when you have good news. So on the whale positioning, it's not looking too hot, because if you notice over here is the zero, the flat line, I guess you could say, above bullish, below is bearish, right? And if you notice, the overall positioning of whales has been going down, not up, and that's usually obviously not a great thing. If we change it to just look at the 318 bets, honestly, this doesn't look good, because just looking at a glance at the top values that are color coded in this positioning, it only goes up to 130. Now, I'm not trying to say that's like the complete top end, or it'll even get that high, but again, that has to do with the support resistance, and I'll get back to that in a second. So we have a couple data points to look at, right? So we have, if we look at the 318 options, there's a giant put wall at 100. But let's say if for whatever reason it shifted past that, you know, there's still puts varied over here into the, I'd call it up to 120 area, which, you know, noticeably the calls are higher, but how do we know those aren't going to get sold off, you know, on that day if it's moving past that price? But what I want to get at is, again, the dark pool. So everyone's always over here, oh no, we can't see the dark pools, and it's like, no, but we can get a damn good idea. This is a GME dark pool summary as of, I want to say, the last few days. What is this, the 8th over here, from the around the 7th to the 8th. We could probably zoom out a little bit more, but I always look again for an ER run up, because I'm not thinking this is going to be no weird MOAS type thing, but for an ER run up, I look at the last few days leading into it. You can look back further, but then it might add a little bit more noise, because some of those people might have just been moving for a sizable, or buying for a sizable move and then selling. They don't actually want to hold it. But then I also look down here, and if you notice, the dark pool sentiment of GME is going very bearish very fast. The last, I guess you could say, positive block trade sentiment was back on the huge block trade was back on the 16th. Ever since then, it's been pretty sparse and kind of bearish. I don't know if you can see a slope over here, kind of on the block trades downward. So it gives us a sentiment. If we look at the trades right now going on, happening around, if you notice, a lot of that at bids being sold off for even, you know, it seems like money's being made on the way down, I guess you could say. They'll come in, buy a block for one of these little tiny little bounces, and then just, you know, really dump it. I'd have to zoom out to see what's going on. I haven't actually been looking at it as attentively as I should, I guess. Back to the support resistance that we were talking about previously. So 130, which is way up here, you know, and if you notice, it'll get us back to trading into the February levels, or the top end over here of, I guess you could call it 125. Let's call it 125. The problem that I have with breaking out of that is, even when you have good momentum, good news, good catalyst, whatever, it still gets, it runs out of juice, if you notice. Notice here it ran into the super trend, and then it bounced back, and I believe that was the day of the NFT news or whatnot. And it's like, so, you know, it's still a sizable move. It's still money could be made. But the problem that we run into is, again, is it enough to break upward and turn it completely bullish and reverse this? I mean, it's really bearish trend that's starting to form. I don't know. Personally, I don't think so. You might see some juice up to, like, call it 120s, and then maybe run out of gas. I don't know, though. Like I said, I haven't been paying it as attentively as I should be. If it hits down into the 50s, you might see another dead cat bounce out of it, but it's getting really harsh for it. I'd say 140s would be the top end if it did get a decent amount of gas, but again, what do I know? I know I'm bearish, that's it. There's some options for the intraday that are still looking, I guess, some calls coming in here and there, trying to, keep it afloat. They're way lower on the strikes. I like using the 5-minute on this. It looks like the top end would be somewhere around 105 right now for the current options that I see. Like if there were an upside move today into tomorrow kind of deal. But it's that would be the top end. Again, I don't actually think it'll hit it. The net premiums are, some puts are being sold while some calls are being bought, and I'd imagine some puts will be rebought, because that's generally how they've been shifting it. Like I said, the thing that would worry me is the 318 expiries. I mean, there's a giant put wall at 100. There's another one that's noticeable on the overall density at 90. So again, 90 to 100 range is very rough right now for Jamie. So moving on, AMC's not looking any better, right? Options have it pinned around $13, I think. It's not at $13. I'm saying it's, call it a magnet, if you will. The 13 flat, so we'll see what it ends at, but it's definitely being driven down. Again, I don't believe in the MOAS here either, so take what you will from it. The dark pool's a mixed bag. It's honestly a mixed bag. There's been buying here and there. Now it's significantly less. A lot of it might be driven by the news, right? The Batman, record sales and NFTs and all that. But I think it's news catalyst. It'll fall off. It seems to be trending with the overall macro. Obviously, we haven't even gotten into the full talk of, hey, this is how much we're going to hike rates, so that'll definitely hurt any company that's debt-driven. AMC is not, it's not completely underwater like it used to be, but it's definitely not doing as great as it should be, in my opinion. Let's see. Yeah, it's going to have a hard time breaking out past the 15 area, I think, 16. Yeah, about 1550. But it's bouncing right now within this little channel that's here. And we'll see another test of 13 flat will be not so good for it. I haven't actually looked at their OI because I frankly don't give enough of a crap about them. I don't play AMC. I just don't. I had a couple puts. It was fun for a while, but I think the problem with AMC is it's a cheaper price, so it's easier to convince someone to throw like a lottery ticket at it for those AMC MOAS people. So sometimes it's okay to not bet against insanity. Like, it's okay to make a little bit of money, but again, always do your due diligence and whatnot. Then you have the new love of Ryan Cohen, the BBBY, and it's actually getting pretty normal, what I would call normal flow for a stock. Like, there's now interest in it, and I think it's the same thing as GME once he bought in, but before the January squeeze, minus the short interest obviously is not as high, but it's one of those things that it's just, there's interest. Institutional, fund managers, things like that, they're like, hey, maybe I'll throw a little bit of money that way to see what might happen. The reason I say that is because there are the dark pool on the BBBY has been way more bullish than AMC or GME by far. I'm not in any of the three. I don't plan on being anytime soon. I've been playing indexes and commodities or sitting on my hands. I'm kind of just sitting on liquidity, trying to find a good time to buy. Like, this is my buy back in price. I'll day trade here and there, but for the most part, it's been sitting on hands. The problem we run into, a little bit of comparison, I guess we could say, is it's still matching the bearish trend that's been there for a while. In order for it to break, it tried to break it out on the 14th, right here at 10 when it was going up, but it didn't manage to break out. I would have to go back and look at the options and dark pool, but I'd imagine it seems like the gas is there, but the macro might be pulling it out. Now that being said, that's, again, if you're in this play, it's bullish for now. It's way more bullish than the other two. The options divergence has it around at 24, 25 bucks, so I could see it pulling back up. I'm not gonna say to 24, 25. First, it'd have to break out of this $20 range it's in, like around 20.40 is where it needs to break upward, and then if it can hold that, yeah, the options want it to drive up to at least 24 bucks, it seems like. And again, the dark pool sentiment in this one is overall, I'm not gonna say it's guaranteed, but it's I'd rather see this than this, because on Jimmy you went from buying to selling, and then on dark pool BBBY it's just purely buying right now. And like I said, AMC is a little bit of a mixed bag, because you'll see buying into selling into buying, but in less amounts. So again, I think the reason there's buying in AMC and BBBY and dark pool is because there's news there. There's something to talk about. There's catalyst. A lot of people are gonna counter me and say, well, look, it's being covered by X, Y, Z. And I kind of don't want to get into the intricacies of the whole Jon Stewart debacle, because I actually watched it and listened to it, and it's just, it feels like he's, I don't know, I don't want to say this completely, because I don't think he personally does it, like maybe his team does it, but it feels like they're kind of cherry picking a couple people to, it's not like form the narrative, but walk you in that direction, that this is all corrupt, and I'm just like, they talk about things like, oh, we can't see the dark pools, we can't see that. Well, you can get a pretty damn good idea. It's here. The problem is a lot of these quote apes don't want to pay for a service, and I'm not saying this service. Just go find one that works for you, and then you can find a lot of this data, and it's gonna show you at least a better view from, let me go source this from 50 websites that I sometimes agree with, sometimes don't. And what I mean by that is, for example, they'll use Ortex and be like, oh, look, utilization is at 100% for 20 days or whatever it is. But you need also, why do they discount what Ortex has for the short interest, or for the percentage of the short interest? And it's things like that you can't cherry pick your data. I tend to use maybe 3 sources of data, and that's about it. I'm not gonna say I'm like a 100% hitter in baseball type trader, but I'm not terrible either, and I'm also not gonna be holding on this rocket ship ticket or whatever. That's people want to do what's called deep value investing, and we're not there. At this price, the pain that, and I've seen this happen multiple times. Like it happened when it was above 300s, above 200s, and now above 100, because we're below 100. People tell me, oh, but what if it moons tomorrow, man? Like, you wouldn't pay, 300 or 200 bucks for one share for a rocket ship to the moon. And I'm like, I'll see the data. I'll see the flow moving. I'll see the dark pool moving. And that's when I jump in. That's what I did in November. You see a big volume, large money calls come in, and then you act on it. You go, okay, there's commitment from this big money into that play, so I'm going to hop in as well. Sell, obviously, for a profit. Don't sit there caught holding someone else's bag. There's not really anything else to talk about. Again, I'm still bearish on all three in the overall scheme of things. I don't believe in MOAS on GME or BBBY or AMC. But I think BBBY might have a little bit more upside than the other two. Once the macro recovers, yes, you know, all of them might recover a little bit until we talk about debt. I don't know. We'll have to wait for the ER to see what books are looking like and what earnings were and all that jazz. But if the ER isn't that great, which I think they're trying to fluff the ER. I think they're trying to pump it. I think they're trying to pad it up because they're delaying, you know, they're delaying the data of sharing of sales for Christmas and all that. So I feel they want to pad it up. But I don't know if it'll be enough. It'll be a make or break moment, but the problem that we run into is, again, it'll break against the trend. Call it 140. You know, let's say it has amazing ER and it gets somewhere up to the 140s, 150 range, and then it's kaput. So wish you guys luck to any of you guys that are on these rides. Again, I currently have no position in any of the three. Someone asked me if I see 130 again because they said something about their last shares being bought in at that price, and frankly, I don't see it right now, but maybe the ER will blow it up. Maybe something crazy will happen, right? But I don't foresee it personally. So again, good luck to any of those of you that are holding on to these things and hoping out for, you know, more than what you think you'll get. One last view, GME roughly 105 options right now, currently where we're standing. AMC wants about 1350 on the pinning, and like I said, BBBY is actually up there in the 24 or 25 area. Here, let's look at the overall. Yeah, there's a lot of call volume on BBBY. Let's look at this one real quick. Yeah, it's bearish on the GME one. AMC one might not have enough data to load. Not enough data on the AMC one. And like I said, the BBBY dark pool's more bullish than the other two, and AMC even is a little bit more bullish than GME. Last time for the November run up, by this time we already had buy-ins on the call volume and the dark pool for the ER. For GME, this time it's absent, so take that as you will. This is also to address the spread that everyone talks about. You can see it at work here. Like, I don't get why it's such a big deal. Oh no, we're being ripped off of pennies. There's the shares being traded. And you can see the spread at work sometimes if you watch it live. So there's the bid on the left, and then it'll get driven up and down. Then you'll actually see the trade take place. So all this space in between is that famous spread that they talk about, and most of the time you don't even see it in the candles. So I don't understand why people are losing it over. I mean, if you were a millionaire or a billionaire and you're losing, a bunch of pennies, billions of pennies, if you will, sure. But retail, it's like, again, you're getting access to quite a few things in exchange, like the commission-free trading and all that. Like, the data services, in my case at least, for TDA, Thinkorswim platform, and a lot of these other things. You're not getting all that like for free, right? They gotta, and I'm not justifying it. I'm not saying they should go and break laws, but this is the famous spread that everyone cries about. There's one right there. And again, this has been happening long before GME. It's just kind of built into electronic trading, or algorithmic trading, if you will, too. A lot of the reason some of the people will lobby against it is, well, because they don't have the best or the fastest. I don't think that's fair either. You shouldn't even the playing field by let's bring everyone down and cap the speed. I understand it can work in certain environments, but not as we're using technology to move forward. We should always want to be innovative. And the people that, sorry, if you can't get with the program, well, hire people that can. And I think that's why people are mad at the bigger hedge funds, because they don't hire just anybody. They hire people from, top math schools, Silicon Valley. There's a couple people that have done interviews. If you look on YouTube, I'll share the links, or pull the links up in a second, but it's basically they're ex-quants from like Citadel and Virtue and Sigma, I think it is, and they do interviews, and they're just, very smart, talented people. They'll go to do their time there, and then they'll move on, and they'll work at great companies like YouTube or Instagram or whatever. Some people think they're there for like life, trying to figure out how to like screw over specifically the MOAS crowd or something, and it's just not the case. they're trying to do this. They're trying to squeeze the pennies out mathematically. Yeah, this is not looking good right now. But, it wasn't looking good before, right? And that's the other thing I'd look at leading into an ER, the calls and the puts, right? The strikes. Before, on the November one, they were being driven up. The strikes were going higher and higher each time. Now they're going lower and lower for the most part. The GME channel, because it's failing the trend right now. I dare say there's a midpoint somewhere in the like 72, 73 range, like right around here. So it might catch if it keeps tanking. It's failing the CRSI breakout right now on the 3 minute, but that's for intraday. I've been looking at the 30 minute, 10 day a lot lately for a lot of macro in my trading lifetime, like in the moment I'm living in. And this is what I've been using a lot. And right now it looks like GME's trying to grab on a foothold. But if you notice what I was saying earlier, so this is the channel top end, and it just got dragged down. And when that happens, it's limiting you. So we went from this previous channel, and if you notice, it's visible here on the support resistances I have drawn. You get dragged down to below this one, and then I had the blue line because it was pretty significant support and resistance at one point. And then I think it was pegged into dark pools. I think there was a buy around there, a large buy. But then it gets dropped below that, and then here you have the falling off of that because it's gonna the bearish trend is continuing. It's not gonna get reversed, right? And when the channel top end drops, so do your, I guess you could call them upper limits of price improvement or gain or whatever you want to call it. Basically, line goes up. In this case, it's not going to as far up. It's being limited absent another breakout from the CRSI, which right now it just got back into CRSI, if you notice right here. But again, I'm still pretty bearish on the whole matter. It's barely able to hold 80 bucks. Well, like I said, I wish all of you trading these tickers luck, and I hope you make money. I think a lot of it's depending on the macro turnaround, but again, I don't foresee that making any of these quote MOAs. Always question the people that are giving you data. That includes me. Like, I always try to link my sources. I always try to provide video evidence, not screenshot or whatever. I'm gonna try to be transparent, but even then, you should go and double check this data with something else. And always, it's your money. Make sure you're doing it for whatever reasons, bullish or bearish, because you want to. If it seems like you're doing it because of impulse based off other people doing it, and you want to fit in or be part of a group or movement or whatever, then that's also on you. But I don't know how it's going to go for you financially. Yeah, I noticed the strikes are shifting even lower now. I'm not saying it's going to get to that like by end of day, no, but it's one of those things that I look for in the ERs. It's either going to be shifting upward or downward, and I'm not saying it can't whiplash either way. It's just when there's a kind of a predetermined look at things, and I guess if all the data is lining up a certain way for me, I'm not going to bet against it. And if you notice the net flow, the put buying just went up a little bit more. But before it was lower, so got puts crossing calls over here. Let's go look at this real quick again. Yep, like I said, getting over 100 would be a challenge right now based off the expiries that I have. That's not to say there can't be buying going into the next few days. It's just, that's how it is. All the gamma exposure is in the negative too. And there she goes. There's the spread again. 400, 400. So they nicked, what is that, 79.10 for 79.21 roughly? 11 cents on 400 shares. I mean, I guess you could go cry about it, but that's on your dime, if you want to chase that. I wouldn't give money to any causes chasing that. I try to get better at there's ways to do it. Like you can try to get better yourself out algorithmic trading, or and if you can't, if you don't have that skill set, I'm not saying you need it to be a good trader. I know a lot of people that trade really well and all they use is their mobile TDA app. That's it. And they draw a couple lines here and there, and that's it. They just also, you know, they're very boomerish in the tickers they pick, I guess you could say. More reliable tickers. The meme stocks are always going to be a gamble. It's like the crapshoots, you know. Especially if you're playing options. Time's always against you. You see this big red light up right now a minute ago, so it's liquidity trying to pull it down now. It's fighting this green little bar up here, but I don't think it'll be enough. We'll see. Yeah, we got a lot of liquidity moving down right now. So this would be a terrible time to quote unquote buy the dip, you know, because if you see the liquidity wanting to pull it down, then if you buy right here, immediately you're going to get pulled down, and you could have bought cheaper, I guess, is my point. And that's my point to MOAS too. You know, it's like, okay, so if I see a rocket forming, I'll buy in tomorrow morning when the rocket starts taking off, and Lord knows if it'll be 40 bucks again or 30. You know, that's the type of stuff I'm getting at. And it's like, I feel bad for those people that took out a loan on their house or something at 200 or higher right now. And see, there it goes. It pulled it down. The red dried up, and we got pulled down, and now we got to watch more. But yeah, this is, like I said, it's looking bearish to me. The overall is looking bearish. The Ukraine stuff, you know, there's a little bit of bounce back and gas because of a little bit more injection into the gas pool, I guess you could call it, from the Middle East, but we're still in relatively high price times for commodities. So this is going to be very absent liquidity. Like, people are going to be exiting this to go to, you know, gold, wheat, nickel apparently. Palladium, you know, any of that stuff. Here's a big pool of red again forming up from 78.05 down. A little bit of green forming up here. We'll see. Like I said, so far I'm still thinking this is gonna end pretty bearish, but I think all of it will. I haven't looked at SPY most of the day, except the first few times I looked at it right now on here, but oh, are you back? Yeah, you know, I do boomer trades. I like boomer trades. I did wheat before it ran up a little bit. It wasn't like, you know, it wasn't a lot of money because I'm trying to stay liquid. I'm trying to wait for this huge correction period, rate hike period all to end, and then buy for long again, like, you know, 6 months, 1 year long holds. The only positions I'm sitting on right now that I'm okay with, I guess, sharing, because I've been sitting on them for a while now, and it was planned that way, I guess, is I've been sitting with Sundown, and I've been sitting with Achieve, and the only reason I sit with them is they're relatively immune to a lot of the correctionary behavior of the market, and I mean that in the sense of how much, like, the swings are. Here, let's look at this one. This isn't a boomer stock, by the way. This was a meme stock. It previously got pumped up to, I think it was 4 back in Wall Street bet days. Yeah, it was doing insane moves up into 380s and stuff. I did not buy it until after it fell below $1, and they changed who and what they are. What I mean by that is they were previously very debt riddled. They pulled a GME, they pulled an AMC, they got rid of a lot of debt with a lot of the sales of shares. They did a lot of dilution. That's why I'm glad I didn't buy it back then. I bought it. I started buying basically when it hit like 67 cents, 68 cents and below. It's my slot machine, I guess. You know, if people like gambling, which I guess I somewhat do in the stock market, you know, $150, $50 to $100, sorry, is not a lot of money on this. Whereas I can't even buy one share of GME for that. People are going to say, okay, well, why don't you buy AMC or, you know, this or that? And it's like, well, I like the way this one is structurally right now. I like the way things are going. It actually has to get above $1 to not get delisted. It got an extension on that. And it's also waiting to approve. It's like a little merger with a company called Alcana. So I'm waiting for that to go through, which I think, you know, if it were me, at least from the other side of things, I'd wait until the correctionary period was over to announce, you know, positive news or good news, because right now it's like you'll get chopped off. What I mean by that is, like, I think it was Upstart, was it, that had really good earnings and then it got chopped anyway, right? And that's the type of thing that you don't, I think that's why anyone's afraid to announce any sort of good news right now in any ticker. It's hard because with the whole macro and everything, you know, the instability because of the war and stuff, it's going to pull you down even if you have good news. It's very hard to keep afloat absent big money. And since everyone's going over to commodities or any kind of futures, or they're loading up on index stuff like VTI, VOOs and stuff, they're not going to want to be playing individual tickers right now. They want their exposure to risk to go down in a time like this. So here we are. Upstart had really good earnings. It didn't, you know, you can see it right here. It jumped up and then bounced down, bounced back up, and then it didn't matter. No matter what you do, if the macro is pulling everything down, then again, money's just flowing out. It's not looking hot for anybody that's reliant on that. You know, J. Powell goes brr. Any company that's reliant on that is not going to do well right now, especially the more debt they have. And if they have no plan, like if they have no outlook, nobody's going to want to bet on, okay, well, you're promising something, but you literally don't even have a roadmap. It seems like the liquidity demand on GME is what's driving a lot of it today right now. Because if you notice, you'll see here's some more red pulling it down until that gets filled. So it'll most likely pull down to, you know, 78.18 at some point here. Yeah, I'm sitting on my cash. Like, one company I love trading is AMD. Like, I love AMD. I've been trading them for 2016, 2017 era till now. Whenever they're at $100, I tend to want to buy them, even if we're in a correctionary period. But right now I'm actually sitting on a bit of my hands, and that's not to say they can't bounce back, right? That's not to say, because they bounce back over here. But the problem that we run into is AMD is a good performing company, but they're very reliant on TSM to produce their chips, and they're in Taiwan, and then, you know, there's a little bit of conflict over there. Aside from that, the lithography machines they're built by a company called ASML, and the lithography machines that are used to make these small nanometer processors are basically very reliant on certain prime materials like neon gas, which a lot of it, last I checked, was actually coming out of Russia. So, like, there's a couple supply chain issues coming into play again, and I think there was one port that got locked down again, and a lot of people are getting tested now in China. So that's all of these supply chain issues are definitely going to be hitting a lot of this in not so great ways. So I'm kind of still sitting on my money on AMD. I do like buying small positions when they're at around 100 for small movements. Like I guess you could call them like intraday swings or maybe overnight swings. But I don't like doing anything too far dated right now because of, again, the correctionary moves happening. But they're definitely a good company that I like to go into. I do not play Intel. I'm not a big fan of them, but if they ever get the pork from the chip spill, they'll bounce up a little bit, which so far I think is still being held up. But the chip spill would help them because they're going to get a little bit of money from that, I'm assuming. If you want to play the overall semiconductor field, you can go to something like SMH, which is a semiconductor ETF, and then XLK, which is the basket for technology. And those basically tend to hold things like INTC, AMD, NVIDIA, sometimes TSM, Marvel, anything like that. Global Foundries might do well again soon. Global Foundries was the chip processor. They were the people that used to make the processors for AMD. They used to be AMD's foundry. Like it was like a part of them as a company until they sold off their share. AMD did, and then now they're just their own company. But they might be relevant again. The reason AMD quit with them is because they were having a lot of binning and basically manufacturing processes go wrong with a certain couple lines of processors that AMD put out. But XLK and SMH gets you exposure. TSM is Taiwan Semiconductor. I like playing them a lot too, but again, if there's a lot of conflict going on in Taiwan, or they can't source the raw materials, then it's not going to do well. I'm not a fan of NVIDIA, but it's also in that same area. It bounces back, it does well. I think it's too pricey for the fact that they fell through on the acquisition of ARM. Like, it'd be worth this price or higher if they managed to buy ARM, which they didn't. So that's another one. But yeah, Marvel, I like Marvel sometimes. They make a lot of the side chips like you use in certain devices. I guess you could call them secondary chips. There you go. That would be a better term. Marvel's another one. I don't think Apple is worth it right now. Especially, I don't know if you heard the news. That's the port that got shut down is going to affect them. That's why they took a huge nosedive today. I don't know if you saw that. But basically they're going to be having issues because I'd definitely wait on that one because the bad news mainly. So you have macro working against them, and then you also have the whole I don't know if they're going to be able to get their Apple iPhones out in time for whenever the next release is, and they're kind of dependent on always pushing technology out really fast and getting you the next one. So I would wait right now. It's looking pretty bearish on them. I was playing them previously. They were doing really good because so Tesla used to be what, like, the huge or the top dog of the options market for the longest time. Like all of 2021 was dominated by Tesla always being at the top of the options flow, right? But near the end of the year, it actually turned into Apple, and that's why I think I like playing them a little bit more, because they did do really well at the end of the year in as far as flow goes. We can look it up right now. Give me a second, and we can compare. Okay, so this is the top, right? The weekly and the daily top flows. And if you notice, Apple's over here on the bearish. It's the second highest bearish for the daily top today. And it's over here on the third top bearish for weekly. So I definitely sit out a little bit. And if you notice, Tesla's down here as well. And all of that has to go with, like, speculation is just getting shot right now. Speculation and high debt, speculatory companies are, like, if you don't have a clear and clean roadmap telling people, hey, this is exactly what we're going to do, and we guarantee it. And even if they have a good clean roadmap and then it gets messed up by the supply chain or something, that's it. It's toast. Again, it's a good company. I like playing them as well when there's a bounce, but right now it's looking very rough for them. We'll see if it catches at around 145s and bounces back, but it's looking very rough right now for Apple. Whoa, yeah, Jimmy's not doing hot right now. Like I said, I hope the best for anybody, but at the same time, they drink whatever. Long-term hold, not option played right now. Everyone is pouring into commodities. Like I said, you know, there's so there's a deal with wheat. For example, wheat had this little bit of a bump up. I would not play wheat now because the wheat speculation was because, you know, it was wheat itself was going up, but everyone was like, oh, Ukraine produces X amount of wheat. They export this amount of wheat. And the thing is, their wheat futures are different from this wheat future, so definitely don't buy this ETF anymore. But that was a good play right now, a bit ago. Now, if you want to go, like I said, a lot of other people like playing the VOOs and the VTIs and stuff, but they're basically, it's kind of like playing SPY at that point. If you go look up the holdings and the weighings and stuff, and the thing I don't like about that is, it's like telling you buy SPY now and hold for 5 years. You'll eventually go up. Like that to me is not a valid strategy. So that's why I'm sitting on hands myself. Like I'm just kind of sitting out, just watching from the sidelines. I might eventually, you know, I if I see a good flow, like let's say I wake up in the morning, because that's the kind of, I'm an intraday trader for the most part. I don't do long swings unless it's like there's a lot of commitment money wise. And like I said, when I see that, then I'm like, okay, I set up for it to enter at a decent spot. Like I'm not just gonna buy, if the macro's bearish, but there's good news on a company, that doesn't mean I'm gonna buy. I'm gonna wait till both even out. I'm gonna wait till there's still news, there's still talk about that company, but the macro's turning around. I don't know if that makes sense. Because right now, buying VOO or VTI or anything like that is the same as buying a SPY to me. And I don't recommend you buy any inverse funds either, because those can go awry. Like you can play something crazy like SQQQ, but then you're technically shorting, so you run a couple risks there, right? If the market magically recovers, you know, then you're gonna get burnt. But for right now that the market's not recovering, it's doing well. The only one I was playing was SARK. I was playing SARK, which is the inverse of Kathy's ARK. And I mean, it worked out well, if you notice, because Kathy was holding a lot of speculative stuff. That's all she was, you know, she was holding mostly speculative growth. It's going to be big in, you know, 10 years from now. And I always come back to my argument that I'm assuming bigger money makes, which is, okay, then why don't I buy it a year from now when it's half the price? Or 6 months from now? And that happened to her, I feel. She's holding a lot of high speculative value. She was pricing Tesla to go to ungodly numbers and oil to crash completely, and here we are, and oil kind of came back up. It's not working in her favor, so I played SARK. You know, I played against her. And it was pretty easy. There was a couple moments here where it was like, you know, in a dip, if you will, and just hold right up, and it's a swing, you know. And that's what I try to tell people, you know, if you're doing that, cool, you're making money, things are going to go really well for you. But right now, that's why I think I'm like 85% liquid, something like that. I'm just sitting. And the reason why is, like I said, I want this huge correctionary period to get to not a complete like bottom, if you will, but it needs to stop being so volatile. And the news in the Ukraine region is not helping. If you notice, this is SPY, and SPY is kind of bottoming out to this area where the bearish trend has not even shifted. Like it's still unfazed on this bearish trend. And just because we have one half green day in there in between of all of this mess does not turn me bullish, at least. Like these little days here, like they're all right, but I'm still seeing the overall. So I'm gonna definitely wait for this to end. Like I said, I've been playing a couple commodities here and there, but it's mostly scalps, mostly intraday scalps. I'll see a move, a lot of flow, bullish. All right, I'll buy, ride it for a little bit, sell it, I'm out. I have the rest of my day free. I don't have to look at chart. I've been trying to chill out right now on this because it's not a good buying time. Just overall, to me, not a good buying time. Yikes. And that goes for like anybody, like there was a dude that just YOLO'd, what was it, 401k in the GME a couple of days, like a day or two ago, and I'm just like, why not wait till it's cheaper, yo, man? Like, if you want to make, because cool, there might be, let's say there's a bounce on the ER, let's say I'm completely fucking wrong and it gets up to like 130. You'll make money, cool. But you could have bought today at a way cheaper price. You could have gotten more shares, stuff like that. Yeah, no problem, man. If you want me to look at a specific ticker, though, like I can pull up the data on it. It's just like I said, I'm right now, to me, I'm pretty bearish overall. Are there winners here and there in the market? Occasionally, every so often, sure. But it's not long lasting. And I think that's what I was trying to show you with the upstart. Like, it did great on earnings. Like, it really did do good. And then it's like, nah, the whole market's just going to drag it down. Right here. Again, that's good move. And it tried to keep afloat, but then the macro dragged it down. That's why I personally would not be, when I go long, again, it's for the intraday move or maybe an overnight move. The biggest gainers as of the last few days have been mostly, I think, capping out at like 11, 12% or something on the daily changes, right? And it's crazy because the biggest losers are somewhere in the like 20, 24% ranges on the red. And that's when I'm like, yeah, definitely sitting out the macro for a bit. I don't want to be burned. I don't want to lose the liquidity I do have, or I did make last year on gains. So why not chill and invest that money properly? Like I said, I'll throw a couple, $50 or something at Sundial, or $100 at Achieve here and there. But again, those are for me already long-term holds. To me, the price is okay. It's tolerable, like for my taste. This is a funny ticker because it's very algo driven. I'll have to do a little post about this. I think I did one. I'll share it if I did. I think I did. I think I did a Twitter thread about this. But basically, they have a medication, a pharmaceutical drug that is to stop smoking. The only other person that has one is Pfizer, but Pfizer's currently has a bunch of health risks that it's getting pulled off the market. I'm hoping eventually Pfizer maybe buys them out. That's my upside move, I guess. I'm hoping out for. It might not even happen. It might never come. But I was buying somewhere. It's basically 780s downward. 650s upward. And the cool part about it is I've already made a little bit of money because on some of them I managed to get some in the lower range and average down, and then I sold a few on the way up. So it's not bad. It's a weird swingable, but right now I'm just waiting for hopefully a buyout from Pfizer. They're doing trials to make sure this one's completely safe and all that stuff, but I'm hoping maybe it'll turn around. If it doesn't, it's not a large amount of money that I have in there. Again, I'm mostly sitting on liquidity for that reason, because I don't want to be hoping on a moonshot right now in a macro market of bearish stance. Like, it seems very rough right now to be long on anything. So I'm gonna not be that guy betting against the bigger money. It's hard. I know people want to wake up every day and make trades every day, but That's not, wait for the timing to be there. Wait for the setup to be right and then jump in. Don't force it. I'm gonna have to get on a few more times, more often, because like I said, this is a moment where I have downtime. I'm not trading, so I could sit, get on, hop on, look at a few tickers, see what's going on. Rough day. The thing that's dangerous here is on GME is this, that we're dropping. I don't know if you guys people that held that long or from back then. In February, we're below this wick. That was the one that drove us up. And we're on par with these wicks back here. So like I said, we'll see what kind of effect the ER has, but scary stuff right now. Sadly, to answer that person that was asking about the 130s, it does not look, from my point of view, I don't know if it's going to be doable. It's just dropping so bad. One last note. I had this saved. Let me open this one up because this one's definitely something that. So I was talking about the spread earlier and how it's like, yeah, they take money, but it's like it's pennies, and unless you're trading billions of shares, and I don't see how you could really cry about it. But there is something else that I want to look at here. So I saved this image, and this is the one I'm going to end on. This is the OI, right? This is the open interest buy strikes on last Friday. Now, for the 11th, we have a little bit of something that points out exactly how systematic market makers can be in bigger money, hedge funds and whatnot. They literally expired all the calls that day, if you notice, because of where GME closed. So that's it, nuked. And that's where I tell people, I'm like, you guys, you need to get this into your mind. Like, it's not exactly a Max Payne thing. It's a how do we make the most amount of money? So we sell these options and then expire them kind of ideology would work there, because they don't want their shares being called away, right? But aside from that, we're looking at the same thing building over here. So like I said, there's 318. Here's the expiry. Here's a giant put wall at 100. And then it's like, what about this poor soul, the poor souls that bought 320s for that day? And even if we did have an upside move, let's say to 130, 120 area, will those even break even? Because of theta, depending on when they bought them? Probably not. And a lot of people won't tell you this, but I'm going to be 100% honest with you guys. Rolling options is a taxable event. So please, please, please do not be listening to random strangers online about tax investment purposes either. I love how some of the streamers are like, oh, I'll just roll these 100 options I bought that are YOLO. And I'm like, all right. And then they roll another ones, a week out. And then a month from then they roll another, 50 or something. And I'm just like, man, I hope you're paying, whoever files your taxes enough money, because I would not, that's not for me. Wash sales, good faith violations, and rolling options, I will only roll them if I know I can make money off the play and it's going to offset the tax move. If not, I'm losing money, I guess. Why not? I'd rather do that than complicate my tax situation, I guess, is the way I'd always see it. I don't want to be that guy that needs to hire a huge firm tax accountant to sort all the messes I've made in the year. And not just that, but he gets to see what a shitty trader I am. No, but all jokes aside, I like filing by myself, and having just a friend that does do taxes look over it for me, and then it's easy. It's easy. I don't complicate my life when I'm trading, and then that means I don't complicate my life when I'm filing taxes. And the other thing is, and this one's not my saying. This is a saying by a way better streamer, way better trader than I'll ever be, Mr. Yen, and he was always saying something akin to, don't turn a scalp into a day trade, don't turn a day trade into a swing trade, don't turn a swing trade into a long. Because that's what a lot of us do psychologically. We'll buy a stock and then we'll be like, oh, tomorrow. Today it was this reason that it got knocked down. Tomorrow. And then, tomorrow comes and it takes more of a beating and you're down more money. And then you're like, next month. Oh, their earnings are coming up. Oh, and then you're just kicking the can down the road. So I've been trying to avoid doing that anymore, which so far it's helped me huge amounts, because there was a time there where I was like, I feel I was too saturated with tickers on how many I was trading a day. And it's like, not only is it hard for all of them to hit per se, but then it's like keeping track of them, is an issue as well. So now I try to trade more mechanically. Less emotion and more, the data points to this, so I'm going to play this, and then that's it. That's literally it. Give up after that. Like, I'm not going to sit here and if the play didn't play out, then I'm not, why would I roll those 320 strike calls or 900 calls a year out? Or no, this is insanity. That's insanity, because again, I'm creating an issue for myself in trading, and I'm also creating an issue for myself in tax reasons, tax purposes. So right now, a lot of strikes 70, 80 range, some as low as 50. Top end seems to be 120 right now for the GME crowd. The AMC crowd is large bulk of it's in the 16 area. Let's go look at the densities. Fuck it. Why am I guess working? Let's refresh these. Do one final summary, and then I will be getting off for now. Here we go. So GME crowd, ooh, that's not looking good. So the put wall is roughly around $90. Some call support in 85, a lot more in the 80 area, but that's not saying much. Possible upside move to 85's area, absent some more money coming in. Even then, there's a larger put wall at 120. Whales are, for the most part, flat or bearish. There's a couple 80 calls sneaking upward, and 85 calls. AMC crowd looking like, let's see here. So put wall at 14, 24. There's an issue because the put wall is growing at 13. What did it end at? Oh yeah. So this is starting to swell up here. So if that gets any higher, then these calls are going to slope down, but not doing too hot. Again, it has at least some news going for it. Whales are mostly flat. There is some whales a little bit moving towards bullish on the 16 strikes. And BBBY, let's see here. BBBY. That's a weird slope. Okay, hey, it works. 1920 ending. Let's see here. Call sold off in the 22 strike area. This is a joke, by the way, not me speculating, but Ryan Cohen revenge trading. Selling out. I think he had higher strikes though, if I recall correctly. He had like 40s and 60s or something crazy. Some pool though. There's calls in the 23 range. and some calls overtaking the puts in the 29 range. So again, out of the three, I would say this one's looking the better of the three. So calls in the 18 creeping up. The 30s are flat, 23's flat. 20's kind of slugging down, but I mean, let's see here, the next expiry. Whoa, that's a huge put wall. If it were to snag down to 15 for whatever reason, like if the move, if this had a move down to 15, yikes. That's some heavy expiration there. We'll see what happens. I don't think it'll get that low personally, but I could be wrong on that as well. Could be wrong on all of it. Remember, double check your data, double check your stuff. The expiry for the next date is looking a little bit squeamish too. We'll see. The overall aggregate though, it's looking like it's range bound from 20 to 30 for now. So I don't think it'll stay this bad for BBBY. Like I said, AMC and GME are the ones looking rougher as of right now. I hope you guys have a great day. Be safe, trade safe. Don't believe the hype. Always chase the data. Great day, everyone.